Hello, fellow traders. Just a quick video on stops. I got a lot of emails, traders complaining about stops being taken out on a regular basis and then the market reversing back into their trade, etc. We've heard that story a million times, and we've all experienced it as well and complained about it. And I'm asked if the solution is a wider stop or no stops at all. Well, of course, no stops at all is out of the question. And wider stops can get you into some trouble in terms of risking a little bit too much capital. One of the most important things about placing a stop, of course, it helps if you have a great entry. The entry is number one. If you have a good entry, you can put a tight stop. But above and beyond that, most traders look at areas of resistance and support and put stops accordingly. And most traders, of course, with ES love to use a 2-point stop. I don't know why. They all do that. It's an even $100, and they all put their stops 2 points above or below key areas of resistance. Now, professional traders know this. This is how they make a living. They come and they run those stops. That's what they do. That's their job. That's how they make money. Obviously, if you want to make money, you want to be on the side of those traders, or at least understand what they are doing. Because if you're going to step in with the wolves, understand that you are the prey, and you want to know where they're looking, where those wolves are looking for the prey, where it's hiding. You definitely don't want to be hiding right there, because they'll come and they'll nab you. And Friday was a great example of that. Let's put the ES chart up here. We'll get back to the NQ chart in a minute. So we opened, we did a little bounce, and we did our typical reversal, and the high is at 1349.75. We come down, consolidate a little bit, the first hour closes, and we start moving up. At this point, it becomes pretty obvious that the stop's going to get taken out. Where do most traders put their stops? As I said, 2 points above the high, 1349.75. Well, okay, here they are, putting a stop 2 points above 1351.75. Lo and behold, that's the high right here, 1351.75. And we start coming down, the day reverses. Big frustration, big pounding on the table, throwing the computer, the keyboard against the wall, whatever. It's all happening at this point, especially if it's happened several times the past few days for traders. So moral of the story right here, if you really believe, that this market was going to come down, well, just don't use a 2-point stop above the air resistance. Or better yet, if you start seeing this move, get out, wait for this move to happen, then wait for confirmation to come back below and see if that resistance gets sold, and then you can go short again. Same with ES, with NQ. We'll go back to that chart. $100 per contract for NQ is 5 points. Lo and behold, the high is 2402.25. We come down, and 2407.25 right here is the exact high at this point. You can see this volume candle down here. This is sort of like a big flush right here. And by the way, that was a good indicator of a divergence, because we made a slight higher high on lower volume, and then we started coming down. Now, obviously, all these guys got stopped out with a 5-point stop here. We made a little bit of a higher high. NQ tends to do that. But nevertheless, you can see with that volume bar how many traders got stopped out right here. So moral of the story, please do not, if you're trading ES, do not put your stop 2 points above or below a key area of resistance or support, or 5 points with NQ. Just be aware of that, and that will save you a lot of heartache right there and then. All right, stay safe.